Welcome to this flight of the Retail Pilot. I'm your host, Ken Pilot, former CEO and current brand advisor, retail tech investor and board member. I'm thrilled to share with you the insights from some of retail's legends and leaders, as well as my perspective on retail today. This podcast is sponsored by the following. January Digital is a marketing leadership company solving business challenges through consulting, media excellence, and actionable analytics for some of the most innovative, growth-oriented brands in the country, including Carhartt, Kendra Scott, Strivectin, and Steve Madden. Made up of January Consulting and January Digital, they offer strategic leadership services and full-funnel media planning, execution, and optimization, leveraging data to provide insights, yielding client success. Bluecore's software solution turns anonymous online shoppers into known customers and repeat customers. Bluecore enables retailers to personalize and optimize their email, SMS, and site marketing campaigns by delivering targeted and relevant messages based on where every customer is in their journey. Bluecore replaces annoying high-volume messaging with high-value messaging. Customers include Alo Yoga, Neiman Marcus, and Gap. Welcome to this week's flight of the Retail Pilot. I am bringing back Chris Burch, who we spoke with over a year ago, and he is our passenger on today's flight. Chris is a legend with an illustrious career of creating and building brands, from retail concepts to celebrity brands, home furnishing concepts to high-end resorts, even investing capital in technology. He has built and co-built a number of brands. We'll get into that today and talk about some of his new investments and what he's looking at to make an investment. Welcoming back Chris Burch to the Retail Pilot. Chris, you are now officially a frequent flyer. How are you?
I'm doing great, Ken. Thanks for having me.
We spoke a little over a year ago around a number of topics. We got into your background, your journey to where you are today. But let's use today's time to really talk about what's happened at Burch Creative over the past year. Take us current.
Yeah, it's actually exciting and it's energizing and it's so unique to, I think what a lot of firms do. And I think we have a really interesting way. I have a lot of young people that work for me in my interior group, and we are in every industry. I think I'm known from a lot of people from the retail aspect, but we're, very, very aggressive in the hotel business. We're aggressive in the real estate development business. We're in the prefab building business. We're in the technology businesses, and we're also in the retail business. So this year in particular, we've had a lot of really good stuff going on. And how do we do it? I think that I'm 100% on the jockey, not the horse. And I believe that there's certain humans that are extraordinary. And so I spend all of my time actually just talking to them, listening to them, listening to what they're doing, and figuring out if they're special and they're unique. So one of my favorite projects right now, and I think is going to be one of the most unusual and interesting projects in the world, is I started off building these prefab little container houses behind my house in the Hamptons. Ken, you may have seen them. And just like everything, I realized that it was going to be too hard to sell enough of them. And I met a guy at a cocktail party. He was so bright, my partner. And, when it all said and done, we're now in Boston, in the Boston area. We have a 140,000 square foot warehouse. We're bringing in building materials and apartments from all over the world. And the good news about it is our partner is POA, which is the Public Housing Authority of the Boston area. So we're building low-income housing. We're manufacturing these boxes in a warehouse. And as we speak right now, a truck is taking them one by one to the job site, lifting them on a crane, and we will build an 11-story, 240 apartments that'll be steel and concrete. And we're going to it's so good for the workers because they work inside. It's great for the speed for the developer. And most importantly, we can give kind of quality and really make sure there's quality. So that's one of the most exciting projects. We named it Lab 9 because we wanted to make sure people understood that this was new and nobody's really doing this. But keep our fingers crossed, it's working out very well. So we'll continue with POA and we'll do more projects.
And Chris, when you started this project, it was being built off of the size of a container, a typical, I think it was a 40-foot shipping container that you were doing.
Yes.
Are these still shipping container size, or
No,
you've altered them? That's the
no,
shipping
no,
container.
no.
Go ahead.
What we're doing is we're bringing in materials from around the world, steel and electrical and kitchens and flooring and everything else, and we construct it in a box. So we're making the box, but the box is very strong because you can imagine you have 11 houses, that 11 apartments, 11 stories high that have to go on top of it.
So, Chris, I would imagine, and we touched on this a bit, that there's also a business to be had around all these outdoor eateries that are in Manhattan that popped up over COVID, where now there are new rules and regulations that these restaurants they have to be mobile. You have to be able to move your outdoor eating facility for street cleaning purposes. I don't know if that's an add-on business to what you're doing, but they're really requiring a lot more a building standard around these temporary huts that have gone up on the street side, at least in Manhattan.
I think that's an amazing business. I think that this is one of those things that, in fashion, we have more demand than we're ever going to be able to supply because, with high interest rates and the cost of the development thing, they can't actually manufacture the apartments at the right price. So we want to stay pretty focused and blindly obsessed over execution. And my partner Niels is Dutch, and having him do that, I give him all the credit.
So Chris, do you and Niels own the business outright, or you have other investors involved? What's the state of the business?
I put up all the capital, and Niels is my equity partner because in my opinion, he's the guy that does a really phenomenal job. So that business is going to be one of my best businesses. It's very exciting because, in a way, it's a retail business because we have to manufacture apartments that are beautiful. And we want that customer, whether they're low income or high income, to see something really gorgeous. And, that's the kind of things I love to do.
And if I were to guess, there must be a company that you're furnishing these apartments with, or are you staying out of the furnishing end of the business?
I was very fortunate to meet someone, Dara, and I formed a partnership with her, with Liberty, and they're out of London. So they do all of my own personal houses and apartment complexes all over the world. And they're in the business of furnishing actually Joe and the Juice, which is another new project where she is going to do a click together so that when you do these retail store build outs, that all the furnishing can click together. No one knows furniture better than you. But, a lot of this situation is, a lot of it is not just the furnishings. When you look at these retail stores, it's how do you get that elegant look? And you don't want to have the workers working in the store. You'd rather have it done in a factory.
Exactly. Very exciting. What else you got going on, Chris?
My hotel, which is the most exciting hotel, we've gotten a lot of accolades. It's called Nihi. It's off the coast of Bali in an island called Sumba. We've been rated the number one hotel in the world many years in a row. We're now developing houses there, and it's one of the hardest places in the world to get to, but people love it so much because it's barefoot. It's amazing. And that's one of the trends that I see that is going to be important in the future, that people want to have the freedom. They want to go on a vacation with their family. We're really good. We give back to the community. We have the foundation, the Sumba Foundation. Our guests become participants in that. And that is the most exciting thing that I've ever really been involved with. But the nice news is we're about to build in Costa Rica. So it'll be a 3-year project on 2,000 acres. My partner Ronald is awesome. We'll have everything from riding to polo to equine therapy to really good food. And again, what I see as the future of retail is you have to have an authentic experience. And you can't just say, I'm going to give away a pair of shoes for every shoe. You have to actually really mean it and get it when. And Nihi, in particular, our guests become participants in the foundation. Can you imagine going into a Four Seasons hotel in New York City and them asking you to donate money? But our guests actually want to give it. And we raise about $1.5 million a year for the foundation strictly from the guests that show up at the hotel.
We had Mindy Grossman on the podcast, and I asked her in rapid fire, favorite place to vacation. And she said, you've never heard of it, but this beautiful place called Nihi. So she had loved it, had been there, shared the experience, but it sounds amazing. The closest experience I had to this, it sounds like I had a chance to visit Richard Branson's Necker Island
Oh,
for
wow.
an
Lucky you.
afternoon. And that was pretty amazing, but it was a real community, a
Yeah.
compound, a place
Yeah.
you'd want to be and stay, and really special and unique.
Yeah. Nihi's the size of Massachusetts. They're naked. They do race fields. It's a whole different experience. So, and then I think the new thing that's really exciting that I don't know if I mentioned on your last pass that is we decided to understand that the pricing of salads and of food around the world is going up too fast. And so I have a partner, Erica Wishnow and Judd, and we came together and we determined that we were going to make a salad chain. And this chain is so exciting. It's called Green Lane. We opened our first store a year ago. It's really doing just beyond unbelievably well. We were fortunate to be able to get Gronk and the whole Gronk family to be my partners. They're actually founders. We just opened our second store. We'll end up opening up probably 100 stores around the country, but we're $10 and under for a salad.
How
So
does it
you can
work?
get a chicken Caesar salad for $7.95, or you can get a wrap for $7.95. And we're all about value, all about freshness, all about everything, but it's a drive-through. So that way we keep our costs under control. We're very focused, and that thing has turned out to be a much bigger win than I ever expected, and it's gotten incredible reviews, and people love it.
So it's simply a drive-through. You don't go inside. You just pull up and you order your salad.
Right? We have a double, a double lane and a single lane. You can park in the parking lot and come up and go to the window, just like you used to do at a Dairy Queen, or you could go through the drive-through. We're 2.5 minutes in line. You can order any kind of salad you want, any kind of wrap you want. We're for the everyman day salad, but it's great quality, and the consumer is just so excited.
Green
And you
Lane.
can imagine, yeah, you can go to Green Lane Go, and it's in Tampa. And so we're going to use the strategy to roll them out all over Tampa. But again, my partners own 300 fast food restaurants. So what we wanted to do was actually say, let's go fresh and let's bring that discipline.
Now, I'm going to guess that at some point you're going to have prefabricated Green Lane locations that you'll be rolling out off the back of a trailer, right?
Yeah,
That's going to be the
yeah.
next thing.
Yeah,
Okay,
I
just want
think
to
I
make
think
sure everything's
because of
connected.
our own business, when Niels has a break, we're going to be setting up another supply chain. So we'll be bringing those prefabs in containers and clicking them together, and that will cut our costs down dramatically. But we don't want to get ahead of ourselves, right? We want to be focused on the customer. And you and I both know a lot of people talk about the customer, but it's really important that you really give back to that customer and you really give them value and quality. And so we here at Burch Creative Capital like to think about ourselves as we're actually in the aspirational luxury business in everything we do. And that's what our theme is throughout.
Chris, are there other investors in Green Lane, or again, is this similar to the other company you just shared with us and you own it all?
Yeah, I own it all with my partners, but the Gronk family put up capital and we're raising money. We're way oversubscribed. So we thought we were going to raise like 8 million and we have demand for like 25 million. And so this is one where when I see a great investment, I want my friends to get in. So this is my core group of friends and people put in anywhere from 100,000 to 2 million. And like Tori and like a lot of my investments, over time, I try to bring my friends along for the ride. And the reason I do that is because it gives me a lot of pleasure and it's a lot of fun. It's a lot of work to bring them along, but it's fun.
It's interesting. You've been on the sell side and you've been on the buy side. Now that you're quote unquote on the sell side of this investment, how are you positioning it in terms of you're looking to raise 8 million at what valuation? What are the terms that you set for this investment?
So it's a pre of, what is it, a pre of 40 and a post 44. And we set that valuation based on our management team, which is extraordinary, and our early store. And what we did is we really generated what we think were going to give us a return on a very conservative basis. And we wanted our investors to make 25 to 50%. So we wanted to, that's where we set it. We've had no issues really actually at all with the valuation, because once they go to the stores and they see the lines and they see the customers, they realize that there's a ton of momentum. And sometimes you get momentum right away, and sometimes you have to fight for momentum. You know, the container houses, I realized I couldn't sell a lot, so I had to pivot. In many cases, you get lucky enough to have a great opportunity, and the customers have said it. So we decided that was the valuation.
What are the unit economics? What are they looking like so far with Green Lane?
We'd like to make like a 22% bottom line on each location. We're doing we'd like to do between 1.6 million to 2.2 million a location. We do about 30% in takeout, but it's growing very fast. When we first started, we do 1,000 a day. We're now up into one of our stores between 4,500 and 5,000 a day, and that's continuing to grow. So, it takes time to get a brand out there. But with Gronk, who we just finally announced that he's our partner, we had a great grand opening, and it's just taken off.
Let's take a quick break with a word from our sponsors. Predict Spring is a global point-of-sale platform live in 22 countries. The platform includes mobile POS, endless aisle, fulfillment, inventory management, and clienteling, creating a true omni experience for customers and associates. Predict Spring powers Suit Supply, Converse, Lovesac, Decium, Janie and Jack, and Bouclair. Potential for franchise, or do you see keeping this owned?
I think you never can say never. I think that we want to stay company owned, and we want to stay incredibly eccentric to people, and we want to be reasonable. It's very important. I really believe I got a salad in New York City from a salad vendor, and it was $20, okay, for chicken and avocado. And I'm like, $20 is a ton of money. If you were to buy ours, it would be about $9. So for me, we can't open in New York City because it'd be a little difficult to open a drive-through, but we certainly can do it. So the unit economics are very simple. We don't need that many employees. We actually have a very big takeout menu. We have good technology, and we have a great supply chain. And all of those things go to saying this is specific.
And what's happening in the fashion space? Have you touched on that over the past year?
Well, Stod is, I got in there at 400,000, and it's now doing in excess of 100 million, is doing extraordinarily well and extraordinarily profitable. And I'm very excited about that business. The president of that firm and Sarah are two of the best people that I've ever met. And that business has tremendous momentum, and it'll be growing around the world. And it's exciting. The customer really likes the affordability. They love the style. They love everything. I just bought with my partner, Tom Vilas, Rowing Blazers, which is a very hip, cool line. It is a business that Jack had done an amazing job where everyone wanted it. It's a very twisted prep, happy and cool, but it needs a lot of operational experience to come in there and get the right goods at the right price and whatever. So we're now at a turnaround of that business. We bought that business when it was struggling, and, it will be determined. I hope people buy it and like it, and we can find a place both in women's and men's for that brand. I have a brand called Daniel Guzio, which is doing great, she's an amazing person. So that is doing well. We're dropping our prices, and that's important. We realized the customer couldn't afford it. So that business is doing well. And then I have another brand called Solid and Stripe, and that's in the middle of a turnaround. And we have a lot of work to do there. And that's a brand that the customer loves, but we have to get everything pulled together.
Let's go back to Rowing Blazers. Was probably an opportunity not too dissimilar to what I know is out there today. A lot of distressed companies looking for a savior. It's been really tough out there, certainly in retail, startup land, companies that are, stuck in that 25 to $50 million range that are just struggling. What does that look like when a company that is struggling comes to Chris Burch and says, Chris, are you interested? What are you looking for? And what are you willing to pay? What are some of the metrics that you can maybe share with us that you considered and then finally paid for the company?
Well, we invest in two ways. We invest in businesses that have momentum, which is Guzio, Daniel Guzio, had great momentum and a great business. We're always very fortunate in any investment that we make. The partnership and our operating experience, particularly in retail, gives us a big edge over a private equity fund. So we don't really look at any metrics as far as a multiple to earnings. We're like, Daniel, would you like to be my partner 50-50? We can take this business from 12 million a year to 200 million a year, and it makes sense for you to do it at this price. And those have worked out really, really well. And same thing when it came to Stod, they were doing like 400,000. So when I looked at Rowing Blazers, that was a different situation. That was really underwater. They hadn't been able to buy products, so they had no product. But they had a massive image across America, but they haven't been able to deliver product to the customer. And so we looked at that from the perspective of what can we do for cost of goods? Can we bring a solid management team in? How do we actually maximize this business? How long is it going to take it to turn this business around? And how do we actually build a soul to the brand? And we thought that Rowing Blazers had a perception of having a lot more sales than it does. It's actually a miniature brand. And a lot of that was, we looked at the fact that there's a lot of demand. So I always want to have brands with demand.
And there, just share with us a little bit more about who Rowing Blazers is for those who aren't familiar with the brand and the concept.
Yeah, Rowing Blazers is a brand that came out of the founder, Jack, who it was a rower at universities, and he did a book, a Rowing Blazers book. That book was a big hit. And he then said, I'm going to start this brand where I'm going to make men's clothing that looks very similar to the 60s. They do a lot of drops. They're very preppy, extraordinarily preppy. They're very kind of Ralph looking. They don't really do women's. They did a big collab with Target, which did extraordinarily well. And they're doing quite well out there. But we have a lot of work here. And so this is something that's, is a risk, and it takes me to bring my own team in to do it.
When you get involved, you make an investment. What do you get if I'm the company, if I'm Rowing Blazers or Stod or any of the companies that you've named? How much of Chris Burch do I get? And what does Chris Burch believe is the best of Chris Burch that goes into each of these companies?
So that's a really good question. I'm probably the least busiest person of all my groups or all my companies. I used to be extraordinarily involved in merchandising and design. When Sarah and I first started, she and I would play off on the merchandising design. I have nothing to do with the success of Stod from the design or merchandising point of view. My president, John Zeiders, does. So it all depends on each business. When it needs me, I'm there to help and give the knowledge and try to give the rules of an industry. When it comes to, let's say, Lab 9, I really am not bringing that much to the party. My partner is the real depth of it. But I can think strategically. How do I put the loops together? So sometimes I have a really large strategic point of view. Other times I may have even a detail point of view. I just took a trip to China to stay relevant, and I met with 20 suppliers, and I spent all day with jet lag to make sure that we could get great product for all of my brands. Should I be doing that at my age? I think I'm out of my mind. And I have to be honest with you, sometimes I'm in the details, but most of the time I'm actually trying to think strategy.
When you're working with a company or you invest in a company, I assume it always comes with a board seat?
A lot of these are really small companies that the board is really insignificant. It really is. And I don't want to get in situations where the board has actually any control. We believe in working the business. We don't believe in board seats or board control or any of that stuff. So it's really a level of trust. I think we're very different. And actually, it's a good question. But when I sell a piece of the business, I bring a private equity firm in, or if the business gets so big where I need a strategic board, I'll put a board together. But it's actually something I don't believe in actually. I think they'll actually just sit there, talk, and I believe it's important to get, involved with the entrepreneur.
What is out there today that you can share with us that's exciting for you that you're looking at? Any categories or companies or things that are next to be part of Burch Creative Capital?
I think I like the idea of using supply chain and luxury in the market of housing and the market of hotels and the market of everything. I really like that. And so I'm working with one of the great restaurateurs, and how do I build a new cool hotel in a place called Hialeah, which is in the middle of an industrial area. I was fortunate enough with a partner to own 10 acres there, and I'm buying much more land. So I love the build it, they will come. And I believe that the new market in hotels is you're going to have a nihi, which is barefoot and exposure. But the real issue is this new generation, I think, wants to party hard, but they want the best spas in the world and the best environment. And so I need a big piece of land to actually make it cool and hip. And how do I do an experience that is like second to none? And whether when I built the Faena Hotel in Argentina or when I bought Nihi, I don't mind to go to areas that are very untested. So I think the future is obviously about health and sustainability and taste level and great sheets and great beds. But it's also, you need to have like entertainment tied to that moment when the entertainment is over. It's the most relaxing Zen like place. So that would be the most exciting that I have. And we're working on that and we'll see if it comes to fruition.
It's interesting to see all the clubs that are opening up, the private clubs that are opening up, certainly around Manhattan, from Casa Cipriani's to Casa Tua. I mean, every week there's a new ZZ, another club is opening up. And then you're also seeing what's happening out there in the racket sports space. What started a few years ago, where you had pickleball was so important. Now padel is important. It sounds like there's an opportunity to really combine physical, the well-being, and then also the hospitality. And maybe this is the path that you're going down, how to create an all-inclusive club environment for you physically and then also socially.
Yeah, and look, I want enough land that I could put a padel courts in, and I want to be in a major city, so I need a lot of land. And I think it's actually I want the coolest spa in the world that maybe have an outdoor thing, or I have the coolest pool in the world with a big ball. So you couldn't be more right. And I think that it's critical to think out of the box here because I think that I'm not a real estate developer, you know, but I'm more of a brand creator. And I think we have to build something unique and store it in order to get a brand.
Chris, tell us a little bit about your organization, how big it is, and what does someone have to do to get a job, and who's the right person to work at Burch Creative?
We have a small organization. We have about, in the office in New York, about 6 people. I have an office down in Philadelphia, about 5 people. We are a lean, mean machine. Some of the investments we make through the office, we never look back. We don't even get involved. We don't look at it. So we're all about putting those people to work in the brands that really need the help. So once some of my guys may show up at rowing blazers 5 days a week to help that entrepreneur, being the new manager, the new president, acclimate into the way we do things. So that's one thing that we do. We're not as numbers driven or valuation driven as others. We're now doing mostly our own work. I don't think I'm going to invest in too many entrepreneurs unless we have control. I want to make sure that the business directions. And I think to get a job with me, I actually have never seen anyone send me something innovative to get a job with me. Okay. So something innovative could be an interesting way. So I think I'm looking for very bright people that take no prisoners. One of my young men who works for me, we get up at 4:30 or 5 in the morning. I give him a call and say, we're going to war. And I'm not sure I believe with young people, balance in life is the most important thing. I believe that work is critical, particularly if they're younger. And I hope that I train them in a good way so that they go on to have phenomenal careers in the future.
Sounds like an exciting place, certainly with all the categories and all the different businesses that you're involved in. But I know that there's a way that you think about how you bring them together, the intersection points of even one industry that you're in with another, just like with Green Lane and Lab 9, how at some point those two probably come together and created an amazing rollout,
Yeah.
certainly a very cost effective and efficient rollout. Chris, when you think about over your career, which is amazing and you've touched so much, the top two investments you've made or the top two businesses you've built?
Well, I think Tory would be one of my biggest because we had a very small amount of capital and the business is a $2 billion plus business. And Tori and I were fortunate to co-lead that over a long period of time. That's extraordinarily exciting. We've had, certain investments that have been massive returns that had nothing to do with the success. A company called Internet Capital Group, a number of different businesses that we've done. But there's also things like Nihi won't be an investment that'll, outperform anyone in the others. So I think the real question here is I've had a lot of 50 to 1, 100 to 1 investments, and I've had a lot of 10 to 1, and I've had investments that didn't go well. I will say that I think the right question to ask is, what have you learned over the last 50 years of investing, and what are the mistakes you made? And I think I made a lot of mistakes. And I think that I'm a very passionate, creative person. So I know that when you're under stress, or you're, going through a life thing, don't make investments. That's really important when you're an investor, to make sure you don't bring your own emotionality into something. That's not one of my best skills. I think I've learned that people become more and more important, and that I need to hire really good CEOs and try to convince them to come on board. And that's a lot harder than said. So I learned that. And then I think I've learned that I need to get a 10-year vision of where the business is going to be. So when we did Green Lane, I had two incredible partners that are my partners to run the business. We knew there was a demand for fresh food. We also knew that we could execute. And so I think we thought 10 years out that this, and we had very little competition in the marketplace. So I think we have to think 10 years out when you make an investment. And so I've learned a lot of that. I also always sell early of all my investments, and 9 out of 10 times, that's a mistake. But it lets you sleep at night.
It's funny. I think back on a number of investments I've known that you've made, and most of them are winners. I think you had one challenge, maybe with C Wonder, but that was for a whole set of other reasons. What's an investment that maybe got away from you, or one that you didn't complete this year? And why didn't it happen? What part of the Chris Burch?
A good example was, I was just talking about this the other day, was what was the eyeglass company that did so well?
Warby Parker.
Warby Parker. So I met those two young guys when they were very young at the very beginning, and I wanted a big piece of the company, and they weren't willing to give it. So instead of, taking 20% of the company and putting up the capital, I wanted 50. That got away from me, and that was 100% my fault. So there's been a lot of investments that I've missed, and that I could have been in. And I mean, like a lot of them I've had access to that I miss, and I miss a lot.
But you told us last time, Chris, that you like to be first, you like to be early, and
Yeah.
it sounds like you really want to be significant. It's not a 10% that you're interested, or even a 20. It's probably something with a 4 or 5 handle.
Yeah, you're right.
It's not for you.
That's all true. So
Got it.
that's actually very smart. Very good.
We'll wrap this one up with rapid fire. We're going to revisit this category. We did it last time. We'll see if anything's changed. A couple new questions for you. Favorite public company?
Amazon.
What are you streaming now?
TikTok.
Will AI revolutionize the way retail is done?
Yes.
Last question, most important one. Cats or dogs?
Dogs.
And with that, Chris, we'll land this flight of the Retail Pilot. Thanks for joining me today, Chris Burch. It's so great to have you.
Thanks so much.
Thanks for tuning in to this week's flight of the Retail Pilot. And please give us a review on your favorite podcast platform.